you're like me, you got a new indicator and you're ready to use it. You've probably already got it set up and you're going through your charts, looking at all the opportunities you missed and the huge results that the W pattern has. But wait, there's going to be 1,000 signals for W patterns. I want to clarify a couple things for you to understand about your trading system with the W pattern. First is W pattern is always a bearish trade. So no matter what the trend is, you always want to be on the resistance side of the channel. If the trend's going up and you get in at the resistance, then you would be anticipating a counter trend trade. Not very big in nature. And notice price didn't come down equal to those last lows. Meaning, if you get in at resistance, you might want to take pretty quick profits, especially at an area of support. If you get in on a down trade up against resistance, you'll have an impulse wave, and so there'll be more potential profit. Notice here, it broke below the support level, whereas on this side, it stayed above that support level. And lastly, if you get in on a horizontal sideways channel, you came down to support, and that's a place to take targets. So the rule with W patterns and bearish trades is always get in at resistance and always get out at support. Structure has to do a lot with trend, and so we use the Elliott wave. When you're making higher highs along with higher lows, that's a bullish trend. And for me, I only want to take trades at the resistance of these higher highs when going in an uptrend. And I say that because sometimes you'll see a W pattern here as price moves up on these impulse waves, making little consolidations, but not quite being at resistance when it happens. Now, if you're in a bearish Elliott wave, you're obviously really excited about this because it's going to be a great entry point on a W pattern. You will see smaller W patterns. Depending on the size W pattern you use, you might see a smaller W pattern in this impulse wave and potentially a small W pattern at the bottom, not quite coming all the way up to this resistance and then falling off lower. This is not a bad trade. It'll just take a little bit longer in time as it goes up, then comes back to your break-even point and goes lower. And to me, this is the most important information of any trading system. The trend you're going to find within that Elliott wave or ABCD pattern because that builds your structure, making higher highs and higher lows. And you have to understand what the W pattern is and what it is not. The W pattern is a momentum indicator. It is not a trend indicator. Your highest probability would be if you're in a downtrend and the momentum is going up a little bit into resistance. And that's why you need support and resistance. Watch the other videos for price movement and days of movement. Once we understand what the W pattern is, momentum, and what it is not, trend, and what we have to have for it to work, resistance, it will exponentially increase your probabilities. So if we see a trade set up like this, it's pretty easy to see using horizontal support and resistance. We always take bearish trades against horizontal or diagonal resistance, which we have here. And we see that price comes down to our first horizontal level of support, our second horizontal level of support, even our third level, and you need to be taking profits at one of these levels. Yes, this is the closest with the smallest amount of profit, but it has a much higher probability than this level down here. And remember what happens with sideways channels. At resistance, price falls off. At support, price runs up. Here we are making higher highs and higher lows. Then we start making this sideways channel. Price comes up into resistance. We always take W patterns at resistance. This lines up, making a sideways channel at resistance, enter into the trade. And price falls off. So we had no problem coming down to the first level and the second level. Great support area to take targets, but it didn't come down to the last area. Don't always wait for the lowest low. And so we can see price is still bouncing around this area. Not really committed yet to a direction. Uptrend, then we get the W pattern at resistance, making a sideways channel. Great place to enter into the trade. Get the confirmation arrow and price starts to sell off, bounces all the way back up at that high resistance level. Oh, and again, it bounces up against the high resistance level. So this was a tried and true entry signal, but price failed to come all the way down to this support level to get out of the trade. It did, however, make a diagonal support line, giving an indication that price might move higher from here, which we know that to be true because the triangle pattern can be a reversal pattern, or this could be a triple top or a Y-cup. Lots of things to consider when entering into the trade. All right, so here we have an uptrend. Now we have a W pattern in this horizontal area, and right now it's giving us the signal. We can see that we have a head and shoulders, which we know is also a bearish pattern. But if you only take trades that are up against resistance, this signal will be too early for you. You'd want to wait till it goes a little bit higher, or maybe skip this trade, and that's okay. You're going to get thousands of alerts. You just have to figure out what do you like the best. Head and shoulders pattern are great patterns to trade. You just have to figure out, is it a setup that you like? I like it because the polynomial shows me that this would be an entry point, giving me that second confirmation that I would need to take a trade. Now, where do we think price would go to? Obviously, we want to take targets at our first support level, which would be here. Maybe let our runners run a little bit to this zone down here. Let's look at some charts in an upward channel. Remember, the Elliott wave typically has 3 impulses up and 2 counter trend trades down. Off of what? Resistance. So my pink line identifies the trend. And notice the W pattern only identifies the momentum inside this trend. The W pattern by itself doesn't tell me that we're in an uptrend. It's the higher highs and the higher lows that tell me it's in an uptrend. So now that we can confirm the momentum is up against trend resistance, looks like a good place to enter into the trade. Sure enough, it sold off. It went to our first support level, our second support level, then jumped up from there and down to our third support level. Great places to take targets. Yes, this did reverse trend, but this trade's over 4 months long. The more demand you put on the market to go down means the more time it's also going to take. All right, so we're making higher highs and higher lows, so we have an uptrend. You see back here, we had higher highs and higher lows also. Great place to enter into the trade. Also giving you a W pattern up into this resistance area. Always take W patterns at resistance and always take your profits at support. This trade might have been a little bit harder. Your first support level is the beginning of the W pattern. In this case, we had an extension that went higher than that, so that would be your first target. Your next target would be the mid part of the W pattern, and we can see that price came down there. And remember what I said about when the stock is uptrending, it doesn't typically come all the way back down to the bottom because that would be an equal low, which in this case, it's a higher low and it makes a higher low again. Understanding these channels and trend should help you price your targets. So again, we came up into resistance, and this was a heavy line of resistance, having 4 places for price to fall off. If the W pattern goes above the first leg, that means this should be your first target, and we see that right there with a little price bounce up from there. And then the midpoint would be your second target. Price had no problem going there. And again, if we use these lows, you can see that you're outside of the channel. So it's a big ask to ask price to come outside its trend support channel. That's not a good target to take. Another way you could do targets is just draw a trend line off of the top, creating your own resistance and waiting for price to break outside this line. And you'll learn in the other videos, taking the W pattern and duplicating it up will help give you an alert of where price might change, along with the diagonal line, double confirmation. And understand that range boxes are also just momentum, not trend indicators. All right, we got an uptrend, turns into a horizontal channel. Great place for an entry. These two wouldn't be used for targets because they're too close to price. Come down, use this area as support, and you can see it's pretty close, but not close enough. And if you were waiting for this support level, it would have been a couple months for you to achieve that, but it did do it. So now you get this entry area over here, but it's above this horizontal line. So what has happened? Now you're making an uptrending channel. And what do we know about uptrending channel is there's a high probability it's not going to come all the way down to this target because the trend is up. And we see that price came down. We wouldn't have used this because the risk reward wouldn't have been good enough. So we would have used the next level. We see price came right down to it, quickly touched, and then reversed and went higher. Like we said before, we would have took all of our profits because we realized price would not probably come down to this low. Okay, let's look at downtrend and the resistance that we would need for the momentum indicator of the W pattern. We're obviously making lower highs and lower lows. Draw in channel, you'll see that gives you a good resistance area on a downtrending stock. Impulse waves down to support and then counter trend trades up into resistance. Obviously, we would not use this as a target, nor this one because it's too close to the entry. So you'd come off this support level here. Price had no problem coming down. Or now you can use the lower support level because the trend is your friend and price came right down to it. Okay, first thing we need to do is identify the trend, and we see that we are making lower highs and lower lows. Connect that all together, make a channel, big impulse wave down, counter trend up into resistance, giving us a great entry place for a trade. Price comes down, back up, down. So we wouldn't have used this as a support level. We would have started here. We see price came pretty quickly down there. Not quite, but a couple weeks later, we achieved that. And it had no problem going to the lowest lows, which from the entry down to these lows was over 50% in 75 days. Tell me what we have right here. Can you see it yet? Well, this was the uptrend. Here's the sideways trend. And we see that we have lower highs, almost equal in nature, but a little bit lower. If we draw a trend line across those highs, we see we come right into that resistance of a downward trend. Right here, we have an impulse wave down. Then we have an A to B, B leg, and the C leg completion momentum up into that resistance, giving us a great entry for W pattern. Now, this is early because this is the highest high, and there were no other runs up into this resistance level. So what do we know? If this was the first impulse wave, there should be another impulse wave off of this point that would come down into the support side of the channel. So I'm not going to be taking targets so close to my entry. I might scale out at this horizontal support level, but I feel more comfortable letting my runners run onto this diagonal support level. The trend is a friend until the end. I need to make sure I have enough time for this to happen. Here's another chart. We can see an up channel, then it ends and you start making lower highs and lower lows. Draw a trend line across, resistance, 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 resistance. So the trend is down. The W pattern shows the momentum up against this resistance. And we know after that, we should come back down to these lows at least. Now, I would not be as aggressive on this trade. Why? Because we have one impulse wave, then a consolidation, and two impulse waves and a consolidation. Don't really know how much lower we'd go off these horizontal support levels. Just something to consider. Obviously, this is too close to our entry, so I believe this is a fair analysis that will come back down to this support level. So W pattern is a momentum pattern, and lining that momentum up against resistance of the trend is going to make you most successful trading this pattern. You can draw the trend lines in for yourself, or you can use Bollinger Bands, moving average, or of course you can use our polynomial, which is fantastic. Of course, you see that on the watch list, and if you're not in the watch list, go ahead and sign up now because it gives you the freshest trade ideas coming out every other week. Make sure you have all the bugs worked out of your trading system before you put real money to these W patterns.